Time now for a look at the day's top business news with the Chinese president in Paris this Monday for talks with the French President Emmanuel Macron on the US-China trade conflict is entering yet another critical phase. To tell us more, we're joined in set by Brian Quinn. Brian.
Which critical phases are we on now, Eve? It's been a few. Yes, the White House has confirmed it is sending top-level negotiators to Beijing this week as Washington drops hints that a deal to end their trade war could be close. Well, there are still plenty of potential stumbling blocks remaining, though, including, crucially, China's refusal to ease restrictions on outside cloud computing firms. The Financial Times is reporting that Beijing's continuing bias against foreign tech companies, along with requirements that their data be stored locally, still stand in the way of a final agreement. Well, Chinese negotiators are reported to have made an offer that Washington deemed didn't go far enough. Instead of offering further concessions, Beijing apparently withdrew that offer. Still, Donald Trump says talks are progressing well and that a final agreement could be possible as early as late April. Well, checking in on the markets, Asian indexes showing sharp declines in Monday trade following disappointing economic data out of Europe last week. On Friday, yields on 3-month U.S. Treasury bonds began outpacing those on 10-year notes. That is the so-called inverted yield curve that's so often been a predictor of recession. Investors spooked on that as well. We have some technical issues with our markets display, but I can tell you that shares in telecoms conglomerate SoftBank have lost over 5% in Tokyo. The Nikkei closing down over 3%. Chinese tech giant Tencent down nearly 3% in Hong Kong. The Hang Seng there off over 2%. Shanghai Composite is down around 1.9%. The Kospi in Seoul down nearly 2% at the close. Next, the European Union and Australia are kicking off a third round of negotiations on Monday. This on a historic free trade agreement worth 100 billion euros. The EU is Australia's second biggest trading partner. But before a deal can be reached, there are some major sticking points to resolve there, with the Australians finding one European demand in particular a little hard to swallow. France 24 Sydney correspondents Rochelle Harrison-Pless and Gregory Pless report.
On this sprawling 200-acre dairy farm in Australia's Southern Highlands, Michael and Cressida McNamara have been handcrafting sheep's milk cheese since 2011. Their artisanal products include a raw milk feta. But they may have to rename their culinary creations. That's if EU negotiators get their way during a new round of free trade talks with Australia. Under a geographical indication which identifies goods from a specific region, the bloc wants to stop Australian producers from using iconic European labels such as Prosecco, Gorgonzola or Feta, to name a few.
Most Australian producers really feel that feta is a generic name for that white brine cheese. It's not like it has some sort of provincial provenance. A real concern for the Australian market is that there would be extensions to the list. I mean, what are we going to add next?
A fear shared by the National Farmers Federation, who said it would leave Australian consumers confused. However, the EU ambassador to Australia told France 24 that it works both ways and that any agreement would also protect Australian products. The implications for Australia's food and wine industry are enormous, as products like Prosecco and Feta are household staples here. So what's in a name? We asked some shoppers at this Sydney supermarket whether labels really matter.
I still would like to get all the European brands. I mean, I grew up with European brands, so yeah, it'll be disappointing to see them gone.
If I know the cheese, it wouldn't matter.
According to many Australian producers, renaming and rebranding their goods could leave them millions of dollars out of pocket. Both sides are bracing for battle, but as the standoff continues, EU trade officials have already warned there'll be no deal unless the Australians cave in.
Well, finally, for business, the 7th edition of the Africa CEO Forum kicks off Monday in Kigali. The focus this year is on private sector investment, without which leaders say it will be impossible to complete the creation of the African Continental Free Trade Area. The UN estimates that the CFTA could boost intra-African trade by over 50% by 2022. The treaty was signed by 44 states last year, but has yet to be fully ratified. Participants in this year's forum say the main goal is job creation, with the African continent's demographic profile one of the world's most dynamic.
We don't want investment for investment's sake. It's investment to create economic activity, and economic activity to create jobs. Now, we did research last year when we showed that in the next 10 years, I think, we need to create 1.7 million new jobs every month in sub-Saharan Africa. So how do you create every month 1.7 million new jobs, and if possibly good jobs, not in formal sector, in the formal sector? You need the private sector.
Quite a lot of jobs then to be created,
An
Brian.
ambitious goal, you might say.
Absolutely. Brian Quinn with the Business Update, thanks a lot for that.